So here I am in Malaysia, start trading at 10:30 at night, finish at 5 a.m. Now, the last 3 trading sessions, the market's been down. And down, it's the market that is, everything's down. It's not just a handful is down or 2 or 3 of the major stocks are down. It's like right across the board. And this is one of those times where suddenly trading ain't so easy. It doesn't happen often, but from time to time, you get a broad market sell-off. And 3 days on the trot, and with some big names having really taken a hit. Main one is MSTR, MicroStrategy, or now rebranded to the terrible name, Strategy. So a few months back, people couldn't buy enough of it. They were Michael Saylor, the GOAT, hodl Michael Saylor, etc., etc. Well, those people are now on 50% less than what they had before. So kind of careful what you wish for. Anyway, so I just thought I would take you through, if I can, tell you what I did and what I'm going to do next. This is like a market reaction, I guess, video. So let's have a look. Oh, well, hang on. First things first. When you're trading at all-time highs, for me, trading is all about future planning. It's about what's going to go up, what's going to go down, what's going to happen, what's my contingency. If the market rallies, how will I do? If the market stays the same, how will I do? And if the market crashes, how will I do? And then to that extent, what's my risk of ruin? And I'm totally obsessed with risk of ruin. Risk of ruin for me is what's my percentage chance that I can go to 0. And I want to, as far as I can, make that chance 0. So it's things like I don't employ a lot of leverage, as in if I've got 100,000, I don't risk 200,000. It's not to say that I can't get in trouble, because I'm sure I can. So for when the markets were at all-time high 4 days ago, how was I positioned? Could I make money if the market had continued up? Yes. Could I make money if the market went sideways? Yes. If the market sold off, what was my position? So I had it, and how I often have it when markets are trading up to the right, is I have a lot of firepower on the sidelines. So you're giving up a smaller amount of, if you were fully invested, you've got no firepower on the side. So now you're just sitting on a drawdown, a book value drawdown. Whereas for me, I'll give up a little bit of that upside, but if the market drops, I've got firepower to jump in to stocks I want to buy more of. So that's how I set up my portfolio. But I mainly just want to look at some stuff that's moved. So let's jump into it. Sorry, I totally messed that up. I was meant to be on like full webcam, but I was on screen and cam. So anyway, the most important index of them all, the S&P. So from top to bottom, it's not too bad. We're in a drawdown of, to the lowest, yeah, 3.7%. So it's not a biggie. Let's have a look where, so 10% would be down to 550. And 20% would be down to 490. Okay, that's just to give you ballpark of how far we move. I generally set up my portfolio so that I'll have firepower all the way down to a 30% decline. So that counts for individual stocks and the market as a whole. Right, let's go to MSTR. That seems to be the main fall guy. So for people that were buying, I hope you can see this on your screen. At the highs, or in this last section, in the sort of when Bitcoin was over 100,000, you're up here somewhere. So if you bought up here, let's just kind of take an average price, just to not make it too terrible. You're on a 40% drawdown if you bought into the MSTR buzz and hype at the moment. So that's pretty bad. And what do you do? Well, if you're not leveraged, and you want to be long crypto, you're going to you're going to sit tight, aren't you? I don't have any MSTR. I do have Bitcoin. So that's a bad spot. How low can it go? Well, as you can see, I don't do lines and indicators and all that stuff. But from my eyes, I would think that somewhere down around 190 to 200, you might see some buyers. Maybe this area here, see this pivot, you got a high and then you tested it. Maybe you might get lucky and get 225 as a turning point. But yeah, you're not in a great spot. If you've got cash on the sidelines and you love MSTR, well, you're going to chuck some more at it, aren't you? Right, let's go to its derivative, Bitcoin. Right, so everyone and their dog was buying it over 100,000 because they had some narrative on seasonality and the next bull run and this bull cycle and Michael Saylor hold all and Donald Trump's going to like free up crypto, and you know you got some idiot from some company saying it's going to 10 million. I mean, the worst. Well, let's just leave it there. So if you bought somewhere up here last night, you'd have seen a drawdown of 17%. You now sat on a 15% drawdown. Those are uncomfortable numbers, you know. When you've got a big red on like your net lick or what you were seeing just a few weeks ago, it's I understand it's painful, and that's not a good look. The other one I know that a lot of people just can't get enough of is PLTR, Palantir. All right, so here we are. It's been a one-way train. We've gone from, well, where somewhere last year we were trading at 22, we're now at 88, we got to over 100. So on the last earnings call, we jumped from 87 to over 100. And then since the peak, which is kind of where you always need to look at, we're on a 30% drawdown from peak to current price. And judging by where it was happy getting to before, I would reckon we'd have some kind of buyers stepping back in. It will depend all on the S&P follow through and whether people want to buy Palantir or not. It won't have a huge say if the market just shanks. I always like to keep on top of my gold. I always like to look at gold. Sorry, this is oil, black gold. So we really are in this tight range. They love it around 70. It seems to be the sweet spot. So I see no alarm bells there. The most crucial index of them all after the S&P or alongside the S&P is the VIX. So we're beneath 20. Now that for me is key. With a beneath 20 print in the VIX, I don't have alarm bells going that we're in crash mode. If we get above 20, my ears will prick up. And this is the gauge to watch during the day. If this is, I mean, yesterday it did get into crash mode. We got up to 21s, which I'd say at the very like base of that sell-off yesterday is like the perfect VIX number. If this had popped to like 30, it'd have been put your hat on, because that would have signaled to me we've got some hemorrhaging going on, we've got some fear, we've got some like capitulation. But we're back beneath 20. Let's see where we go today, somewhere around 20, and it won't be like around 20 is okay, is my point. Remember when we got this spike last August? So I witnessed several traders pop on this day, literally lost everything, 7 figures gone. They were doing what's known as 112s in the options market, and they had them all layered up and all stacked up. And yeah, a few guys just vanished. So yeah, we kind of, the VIX, to me, there's no massive issue right now. This has just been a healthy, well, I don't want to say a healthy sell-off, because I don't like it when it's blood red across the floor, you know? I like some up, some down, and that kind of gradual sell-off. I don't like this blanket red. So that's a key one to look at. Right now, gold is all in the news. Fort Knox audit, gold flying from London to the US. Is there the gold? Is there not the gold? Is it tungsten bricks? There's so much going on. Is the Trump administration gonna re-link fiat money to gold? I don't think that's even on the cards, but there's lots of gold chatter. And So interestingly, if you're just looking at this price chart, I find these big reds quite an interesting like market characteristic for gold. You get this rip sell-off that almost looks like a fake bar, and then you got it again yesterday. And this is what people forget. They always forget that they're like, oh, I buy gold because it's like, you know, safe haven. When the market shanks, it doesn't matter what you're in. Correlation to 1 when you get capitulation. And yesterday you saw that. You saw, you know, even gold was down a couple of percent. But we are at all-time highs. And here's my, I made this chart the last time we looked at it. So yeah, gold's interesting right now. It's in a lot of news. There's a lot going on. I'm in a couple of Bitcoin mining stocks, and CIFR or CIFR mining is one of them. The reason why I trade this is, if you can see from left to right, is it's my, I don't want to say my ideal, but see how it bounces around, rallies up, drops, rallies up, drops, rallies, and that for me is, that should be like a money printer, because my trading style works with that volatility in a stock. So I'll check my numbers later, but I should have since 2004 been making good money in this, but I will check. This one's always of interest for me. That goes along with like Mara Holdings. I think they do a similar thing, and I think Riot. All see how they're all very jagged stocks just bouncing around. I think it's always interesting to see what holds up when you get a broad sell-off. And the quantum computing area, again, there's nowhere to hide. Even this one was coming off. The ones that were getting, I thought doing well yesterday, was the Chinese stocks. So, and I do not know if this is going to be an inflection point. I raised it the other day with someone that US is under pressure. Where's their value? And China might be that answer. So you've got BABA, you've got PDD. That one's not looking so great. JD. And if you want to just have a broader look, FXI obviously. And yeah, I don't know, I kind of got the feeling that China might be coming out of this. It's definitely on my radar. To not be shy with maybe adding some more to my Chinese positions. And the other kind of geographic area I'm liking is Brazil. Right down here, got all the way down to $22, is the Brazilian ETF, EWZ. And I can't help but see value here. It looks cheap. Brazil ain't going nowhere. Pays a very healthy dividend, even though you know what my thoughts are on dividend stocks, but it will be attractive. That yield will be attractive, and this base price, I think, will be attractive. So that one's sparking my interest. And then at a time like this, I think it's always good to just rattle through the big guys. So Amazon has definitely come off. Apple has held up the best. So if you look at that, Apple has literally not sold off. Importantly, next, and with the earnings out like tomorrow or sometime, is Nvidia. This will control, on the day, the market. Tesla. Now again, this is a fascinating narrative. Inauguration day, Tesla hits all-time highs, and your new trader would buy Tesla because now he thinks or she thinks that Trump is going to make policy that's going to support Elon's Tesla Corporation. Well, it was the high. This is your buy the rumor, sell the fact. And that is a legitimate trading strategy. Buy the rumor, sell the fact. Because if you had sold or shorted this market since, you'd have done well. If you'd have bought the rumor in the way into the Trump winning the election, you'd have done well. So it really is a viable strategy. What rumor can you think of? Whack it in the notes. So this, let's just have a look. Tesla, your local retail trader would have bought it and would now be sat on a 30% loss. And at some point they'll buckle, if they haven't buckled already. So, oh, just out of interest, let's just see where Netflix is. I always feel like that's a fairly decent barometer. That's actually held up pretty well. And Meta, I'm aware that Meta's had a good shanking. Yeah, so we've gone from 744 highs to 657. So yeah, that's come off pretty well. So it's good just to get an idea, get an overview. Let's just look at ETH as a backup to Bitcoin. That's the market cap version, so we have to go to the next one. Yeah, ETH, there's something going on in ETH. I don't know what. It doesn't rally with Bitcoin. It's now beneath this. Again, I don't do technicals, but for those that do, and this line is strong, it's underneath it. And people that bought in this box, once they get back to break even, they will sell, and they'll swear never to invest in ETH again. So I think there's a lot of overhead supply, and ETH is really going to struggle. I really don't like the future for ETH right now. For this to go up, it's got to resolve itself and sort out this overhead supply. It's not in a good spot. I'm not bullish at all on crypto. It's the same now. I feel it's the same for Bitcoin as well now. People like my missus wanted to put their entire net worth into crypto once it got above 100,000. They were like, here we go, bull run, engage, Captain Kirk, let's go. And like, don't know if I've heard it all before, but I've heard it all before. That's when you pack your bags and run out the exit. When your mum calls you and says, how do I buy crypto? That's the day to sell everything. It always has been the case and always will be the case. So again, this is now fraught with overhead supply. People that are long and bought in this block and want out. They don't want to touch this ever again. They've leveraged, they're hemorrhaging, they're capitulating, and they'll hold strong until they can bail for a scratch. So I'm not enjoying that. Let's just have a look. Last one at the Qs. Yeah, this is fine. This doesn't worry me at all. We're in this like trading range. It's a typical Trump trading range. Bullish news comes out, he smacks it. Bullish news comes out, he smacks it. Bullish news, bearish news, tariff news, he's just all over the place. But this volatility is amazing for trading. Just what you don't want is complete capitulation. That just doesn't help me. And I don't think many people like straight line downs, because there's nothing you can do with it. You want just like massive up down gyration trading. Generally, that's the best trading environment. So what to do from here? Well, I've deliberately, because we've been at all-time highs, have a lot of firepower on the sides. I'll be buying into my favorite stocks on dips, and with a typical trading range from Trump, I'll be selling on rips. It's my general strategy all the time, but it's the one I'm definitely gonna deploy in this time. So that's, I don't want to say that's what you should do, because you can do whatever you like, but I'll be looking out for value. MSTR for me is not value. I've got a feeling the market at some point will pursue MSTR to get him to blow up. When a guy is that cocky, that egoed, borrowing money, leveraged up, with MSTR is 3 times overvalued, it's a massive target on your back, and the market will come for him. It might not be this right now, it might be later, we might not be ready yet for it, but at some point he's going to be tested. So I'm definitely not buying into MSTR. I've actually got some way out of the money puts that I'm staggering out into time for if he blows, and that will take down quite a bit of the market, especially the crypto market, if he pops. So I think if you're in the red right now, just flip this and use it for the future. If you're at all-time highs, you need some firepower on the side. That's what I do. This is entertainment only, as you know. and just be prepared for these drawdowns. You normally can't be small enough in your position size. Here we go. So I've got natty gas up. It's a very interesting instrument. It's completely separate from any other market. I don't want to say like crude, but crude, gold, and natty gas have a very much less correlation. So I don't know if you remember the time when we were sub $2 down here. We then found a base, and yeah, they're trading all the way up at $4 now. So much more, I guess, for natty gas suppliers, much better pricing. So that's good, because it's always a worry when it gets down near to zero. Like, what are they going to do? All right, so back to the SPOOs. Let's see what comes later. I don't think anyone likes these big movements downwards. I don't even like big movements upwards. I like the chop, the steady chop up. So I hope this has been useful, just like a brain dump of what's going on. Basically, I think not that it matters, but the chatter is the tariffs are obviously overhead. Inflation is back on the cards. And if inflation is back on the cards, we've got rate rises. And that's probably supporting the gold price, because people think that they can buy gold as an inflation hedge. Bonds are going to react to dictate what the interest rates will be. And then I think with the economy struggling, the US economy, it's a very difficult moment when you have interest rate rises and inflation. I think they call it stagflation at some point. Some genius came up with some word to describe this situation. But and this was like a knee-jerk reaction to that inflation and those poor numbers coming out of the US. So let's see what happens. All of that to me is like, well, it's not really important. Jobs are important, and I'll be following those. But I now kind of think most data is fake. So just follow the market. The market will tell you what's going on. We've got the VIX below 20-ish. The S&P has had a little bit of a sell-off. I'll be sitting with my firepower on the sidelines, allocating it where I see value. All right, I'd love to know your thoughts in the comments. That's it.